Best Emerging Market Carry Trades Since Trump by www.forexconspiracyreport.com. Goldman Sachs says that now is the time to cash out your carry trades on emerging market currencies, according to Bloomberg. Goldman Sachs told investors to close out of an emerging market carry trade recommendation it made 8 months ago, saying there was little scope for appreciation. Following the bank's advice to buy Brazil's real, Russia's ruble, India's rupee, and South Africa's rand while shorting the Korean won and Singapore dollar would have delivered a 9.7% return, strategists Marty and Michael Cahill said in a note to clients. While Goldman Sachs is overall positive on emerging market currencies, the analyst said the real, ruble, and rupee were unlikely to strengthen much further in coming months. The Mexican peso, which was under such stress running up to Trump's election, has done the best of all, as Trump's promises to shut down trade and make Mexico pay for things has come to naught. Although the list of currencies has done well in the months since Trump's election, which currencies will be good for carry trades going forward? The Goldman Sachs strategist said Mexican's peso, Turkey's lira, and South African's rand are now the most attractive carry trade currencies. Amid currencies with lower yields, the bank said there is appreciation potential for Peru's sol and recommended the Polish zloty and the Czech koruna against the euro. There are two factors with a carry trade. One is that you want your money in a currency that will appreciate, and two is that you want your money in a currency with a higher interest rate. You can make money with just one of these factors, but the one you pick has to outweigh the other. The best emerging market carry trades since Trump have all had to do with currency appreciation versus the dollar, which may well continue as Trump's economic plans seem to be going nowhere. Economic growth and the dollar. We wrote recently that the USA will not hit Trump's economic growth target. Incoming administrations commonly attempt to stimulate the USA economy to produce more jobs and more economic growth. The promise of growth then supports the budget increases that they wish to enact. In Trump's case, he wants to dramatically increase defense spending and has promised tax cuts, infrastructure stimulus spending, reduced regulations, and repatriation of offshore corporate cash. These wishes may or may not become reality, but even if they do, how much of an increase in economic growth will occur? Bloomberg reports that the IMF calls Trump's growth target unlikely and cuts their projection for U.S. GDP growth for both 2017 and 2018 to 2.1%. In regard to Trump's economic plans, there is the issue of whether or not any meaningful legislation will be enacted, and then there is the issue of whether or not enactment will lead to the desired results. Priming the pump, deficit spending, or tax cuts to stimulate the economy are part of the same argument that if the government just gets out of the way, the economy will blossom and generate enough revenue despite lower tax rates to pay all the bills and reduce the budget deficit. In the Reagan years, the working population grew in part because of the greatest surge in immigration in 100 years. Today, Trump wants to close the borders to trade and immigrants. That is not a recipe for a stronger economy or a stronger dollar. As such, there are likely to be more and more good emerging market carry trades against the dollar so long as Trump is in charge. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.